Welcome back to Alpha Recap, your quick hit on what moved markets after the close. Energetic Friday, a long weekend ahead, and plenty to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Hey, great to be here. Big day to two over. Markets closed up in some places and down in others, but the headline was obvious. Microcap volatility and a handful of massive volume events.
Exactly. So, what really stands out here is NOTV. It vaulted about 91.8% on roughly 1.03 billion shares. That was the single largest liquidity event of the day.
Yeah, 1.03 billion shares. Wild. When you see volume like that in a low-priced name, you know flows were concentrated, either retail scanners lighting up or a block trade that just ran the tape.
And then, at the opposite end of the tape, we had HUBC. It collapsed about 68.9% on about 132.9 million shares.
Not a great day for holders of that one. Those are the kinds of moves that create real pain overnight.
Right. And the other thing is SOXS, the leveraged short mining ETF, jumped about 31.7% on roughly 925.3 million shares. Big turnover there, too.
Leveraged products amplifying sector moves. That one makes you think about spillover risk into miners and related leveraged names.
Quick reaction, big moves, huge volumes, and the weekend ahead mean elevated gap risk when markets reopen Monday, June 8th.
With markets closed Saturday, positions carried into the break could reopen at very different prices.
Let's break down the themes. First up, microcap and penny stock volatility. A lot of tiny caps moved between 30 and almost 200% in a single session, many trading at about 1 cent.
I mean, when you step back and look at this, small nominal prices equal outsized percentage moves. A few $1,000s of buying can swing a name dramatically when liquidity is thin.
Exactly. Several winners had extremely thin order books. There were reports of names with only 10 shares printed at certain times. That makes price prints fragile and prone to reversal.
And not to ignore the downside, we saw microcap collapses too. A handful were down half their value or more. Those are liquidity and risk events, not fundamental turns.
Analysts note, without filings or credible news, these are flow-driven spikes or collapses. So confirm before assuming any durability.
Yeah, confirm catalysts. Simple but crucial.
Next theme, heavy volume winners and losers. Friday's tape split into both camps, winners with dizzying volume and losers with concentrated selling.
Some standouts. The big volume winners included NOTV, a name called RMSG, and that leveraged ETF SOXS. On the loser side, HUBC and a few others had massive sell volume.
When you see this much volume in low-priced names, it often reflects retail frenzy or a few directional block flows. Those flows can rapidly reprice the float.
And that increases the chance of quick reversals, because the structural drivers, scanners, social flows, block trades, can flip just as fast as they started.
Let me explain leveraged ETF behavior in plain terms. These funds use derivatives to amplify moves, often daily. So a big one-day jump in a leveraged short ETF doesn't mean the underlying sector is fundamentally altered. It means the instrument exaggerated a short-term directional move.
Right. For listeners who prefer the simpler analogy, it's like using a magnifying glass on a theme. Small changes look huge. That can feed back into related stocks and create correlated volatility.
Which brings us to the biotech and small cap momentum cluster. Several names re-rated hard, with some biotech names jumping into the double digits and beyond on event-driven speculation.
Virtu, for example, jumped about 88% on near 90 million shares, which is very heavy for that name and suggests event speculation was at play.
And a few other small and mid-cap names printed triple-digit % gains on heavy volume. Those are the kinds of stocks that hit scanner lists and bring in follow-on flows.
Follow-on flows can be self-reinforcing until a filing or piece of news either confirms the move or sends it the other way.
Short, quick reactions.
Wow, big swings.
Not for the faint-hearted.
Right, wild day.
Moving on. What does all this mean heading into Monday? First, elevated weekend gap risk. Many of the largest moves printed on Friday ahead of the long weekend. Classic setup for headline-driven gaps.
Information gaps were a big deal. A lot of these moves had no confirmed catalysts in the initial reports, so any 8K, press release, or broker notice over the weekend could be decisive.
If you're managing risk, prioritize checking SEC filings and company press releases for names like HUBC, NOTV, ADCT, and VERU. Those filings will drive price discovery on Monday.
And watch whether Friday's volume continues. Sustained liquidity means momentum is real. If liquidity evaporates, that often points to quick mean reversion.
Also, spreads and execution risk. For penny and microcap names, bid-ask spreads can widen significantly, which matters if you need to enter or exit size.
Don't forget short interest and borrow changes. Sharp moves can trigger short covering and squeeze dynamics. Borrow costs can spike, and that feeds the move.
And margin and forced sale risk. Large percentage declines in leveraged accounts can force liquidations, which then becomes a self-reinforcing downside driver.
Quick practical checklist. Confirm catalysts before assuming durability. Size positions with liquidity in mind. Expect wider spreads. And prepare for overnight gap risk after the long weekend.
Let's call out a few names to watch Monday for follow-through or clarification. Not recommendations, just names that were big on the tape. NOTV, HUBC, SOXS, RMSG, FOX, VERU, ADCT, NUWE, SPHL, and INDP.
Those were the ones that either had massive volume or dramatic percent moves. Analysts will be watching filings and volume patterns closely.
Some rapid numbers to anchor the day. NOTV was up about 91.8% on about 1.03 billion shares. SOXS was up about 31% on about 925.3 million shares. HUBC was down about 68.9% on about 132.9 million shares.
And beyond those, we had several names spike over 100% at very low nominal prices, and others collapsing 50% or more. It was a very bifurcated market.
Patterns and trends to monitor. Persistent microcap fragility. Momentum clustering from scanner lists. Leveraged product action as a volatility amplifier. And pre-weekend concentration of moves.
Analysts emphasized this was market structure and flow-driven, not a broad macro shock. That generally means moves can be rapid, idiosyncratic, and short-lived, unless confirmed by fundamental news.
A few more practical things for risk managers. Check whether volume continues Monday. Monitor bid-ask spreads. Look for short interest updates. And be cautious sizing trades in low-float names.
And remember, liquidity can disappear fast, especially in penny names. What looks tradable on a scanner might not be executable at scale.
Quick reaction. Honestly, I was a bit surprised by how concentrated volume was in so few low-priced names.
Yeah, that tracks. When you see that sort of concentration, the market narrative gets driven by flows rather than fundamentals, at least in the short term.
Final takeaways. 1. Friday's action was dominated by flow-driven volatility across microcaps and leveraged products.
2. Weekend gap risk was elevated. Confirm catalysts over the break and be prepared for big openings Monday, June 8th.
3. Leveraged ETFs amplified sector moves and can create correlated volatility across miners and related names.
4. This is informational only. Analysts note elevated risk and recommend confirming underlying news and monitoring volume before revising exposures. This is not personalized investment advice.
If you want to dig deeper into any of the names we mentioned, head to stockalpha.ai. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. Have a safe long weekend, and we'll be back after the market reopens to recap what followed through.